Well, hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market. We're looking at our new SSR portfolio. This is our new swing portfolio. We're taking a quick glance at how it's done over the last few weeks, February. But first thing we're going to look at here is, we'll come back to that in a second, is a chart of the market. This is the mini S&P 500 futures contract, front month in nature. Definitely had a wild session yesterday. Today is Friday, and of course yesterday was Thursday. Today's the 26th of February, 2010, and yesterday was Thursday, and a huge gap lower, apparently on some news that Greece may still continue to default, and certainly not good for the euro, the European Union, if Greece should do that. Nevertheless, the market recognized it was a little too oversold, a little too much of a knee-jerk reaction, and blasted back in a meteoric rise that was simply awe-inspiring. Nevertheless, the huge gap lower was certainly filled by the end of the session. It's kind of difficult to navigate though when you're looking at systems trading, because systems certainly can't predict a news event like Greece, generally speaking, since it's was such a shock. Nevertheless, the market did gap lower and meteoric rise into the close. We did have some bearish indications, which actually expected the gap not to be filled, but nevertheless did expect some retracement of some sort. As you can see, we got a retracement back to the underside of this trend following measure of support resistance right here. Beautiful clean retest of that trend, and then just a blast once we got above the trend. As you can see, we had bullish indication here, bullish indication here, bullish indication here. That was all in forerunning the actual break. So we had this triple threat bullish bias right here, and then we get the break of the price technical and the trend. And as you can see, the market really had an impressive close to the upside. Nevertheless, we're going to look at the daily chart in a second, but just looking back over here, this, of course, was Thursday the 25th. Wednesday, more extreme choppiness, as you can see right here. A blast up, a breakdown, fake out, and then a complete retracement and a new high, and close essentially at that high of the intraday. And as you can see, some mixed indications in our proprietary indicators, as you can see down here, and mixed indications suggesting that the market really is struggling right now to find its direction. And of course, again, we'll look at the daily chart in a second of the market. But as you can see on this day, Tuesday, Monday was a super quiet day. But once we got the gap lower on Tuesday and retested the trend, as you can see, it was an extreme, overwhelmingly bearish indication right here. Let's see, that's bearish. Actually, it wasn't extreme. Wasn't too extreme. We did have some extreme divergences. Obviously, we'd slipped into the bearish column right here after diverging markedly on Monday. And this indicator right here, of course, came on board as well for the full bearishness after being bullish actually the day prior. And what do you get? A very impressive move lower. So that's kind of what we look at from a discretionary perspective. Our intraday indicators, our intraday dynamics, proprietary indicators, as it were. But so that's where the market is right now. But what's it doing on the daily chart? Wow, this whippiness. Well, there's the daily chart of the S&P 500 cash market, and as you can see, a beautiful bullish tail reversal to close the upper echelon of the day. And that, of course, is based on yesterday's news. But nevertheless, a beautiful, had we not mentioned last week that although we had went bearish at 1091.76 and had two consecutive higher closes, I believe it was on this bar right here, two consecutive higher closes above our very key measure of trend following support resistance convergences, as well as the horizontal support resistance level of 1100. Given the Fibonacci retracement band, we certainly weren't looking to forego our bearish bias on the market, and as you can see, the market did continue lower. We actually got a high mid-level, we'll call it, ET sell signal with close at 1094.60 on the 23rd, but the market reversed that. Being mid-level, it can certainly reverse that, but then, of course, we got the news from Greece, but didn't close below there, so it's very interesting. The bulls may have a shot here, so we'll see as we go into Friday's session if the bulls do have a shot. But obviously you have this beautiful trend down right here. Look at that. Look how clean that is at 1100. So should we get a break back below, certainly the bears will confirm their bias and will make quick inroads to 1050 once more, certainly 1060 in relatively short order, and likely 1020. in all honesty. Certainly 1020 to 1040, but nevertheless, the bears overall will confirm their bias, their influence on the market. Now, having said that, should we get a close above this little micro trend right here and above this key fib zone right here, then the bulls are back under control. So it's a very interesting setup that we're getting in the market. From a momentum perspective, as you can see, intermediate term neutral remains the case. Short-term bullish is the trend. In the short term, bullish is the trend. For our intents and purposes, obviously, for our official market timing, we do remain bearish. Of course, that has garnered 600 points or so over the last year and a half. So officially, we're certainly still bearish. Just waiting to see what the market will do. Now, having said that, we're going to go look at. Actually, we're going to look at a few of our on a few of our systems. Swing system 11.0R right there, as you can see, in a beautiful long setup, just really riding all these waves. Beautiful short profits right there, long profits right there. Swing system 10.0, that's actually not part of it, so we're going to move that over there and move over to the 12.0. Beautiful long, look at that, oh my gosh, insanely beautiful trade right there, holding all for the whole thing. Kind of choppy, wish we wouldn't have had this buy signal right here, but overall just taking a little bit of the profits garnered right there. Swing system 13.0R, really being able to weather the storm, being long, but being able to weather the early session gap right there, and actually came back for a short bias, which certainly if the bull, it could go either way right now as we're at this fulcrum. So this is going to be some good exposure to have if the bears do continue to maintain their influence. Although right now, on a short-term basis, the bulls actually have a slight edge in the market. But again, going short right here is the swing system 14.0 R, and after catching some beautiful trades right there, as you can see, beautiful trades right there, loss right there, eats into that one right there, but overall doing quite well. And here's a new swing system 15.0, and we'll just look at that. Look at that. $90,000 in profit, $184 every time you put on a trade. $184 every time you put on a trade, $90,000. What we're going to do is we're actually going to take a look at these systems in concert with one another, and that's our new swing system R, SSR. And as you can see, we've kind of just taken the daily profit of each system over the last month, over February, since inception, and see how it's done. And as you can see, making $8,000 in February, $7,767.50 on a $30,000 account. Now, of course, it's an aggressive portfolio. If you want to add a little more funds to, say, $50,000, that's certainly doable. It gives you a little more cushion. Nevertheless, the portfolio at $30,000 has made 26% in February. On an annualized basis, that's certainly well over 311%. As you can see right here, we just put the portfolios together, and 11.0 to 15.0 R. And here's the performance returns over the last year: 359 days, 95,000 in profit. We're looking at $221 every time you place a trade. $221 every time you place a trade in these 5 systems, of course, together. There's the equity curve line. See how it's done. New equity has, 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 and a slew of new equity has recently. It looks like we've consolidated, coiling right here, and as you can see right here, and just going to head right back to the upside. As you can see, but the most important thing, over the last year, this portfolio, swing portfolios, only had a drawdown of 21.24%. So that's a pretty impressively low drawdown. Now, looking back over the prior years, the drawdown has been greater, probably around 50-60%. But nevertheless, if you're well capitalized in your portfolio, for instance, this is based on $30,000 in capital. If you want to put $50,000 in risk capital to work, you're certainly going to have a less drawdown percentage and have a much more comfortable ride and be able to weather these drawdowns that will occur. This is risk speculative trading. But still, it's obviously a great portfolio, putting up more impressive gains even this month. So you can subscribe to the portfolio for just $1,500 for 3 months. Just go ahead and hit add to cart, and $1,500 for 3 months will get you in there. If you have any questions, go to the website, chat with the support team live, or shoot us an email to admin@MiniAnalyst.com, and we'll see you next time.